Let's be honest. In 2025, the words safe and investing don't always show up at the same party. But if you're someone who wants to grow your money without losing sleep or your entire savings, this video is your golden ticket. No fluff, no financial wizardry. Just real, smart options that won't make your wallet cry. Welcome to Opinion, where we break down complex money moves into simple decisions, with just the right amount of sarcasm, sanity, and sense. So where should you actually invest safely in 2025? First, we need to make peace with a simple truth. Every investment carries some level of risk. The game isn't about finding zero risk opportunities, because those basically don't exist. It's about managing risk wisely and avoiding the big, dumb mistakes that drain your finances. It's not about being perfect. It's about being prepared. Let's start with the most basic and surprisingly decent option: high-interest savings accounts. Sounds boring? Maybe, but in 2025, online banks are offering returns of around 4 to 5%. That's not going to make you rich, but it's way better than having your money sit in a checking account doing nothing but aging. And the best part? These accounts are usually insured, which means even if your bank pulls a disappearing act, your money is protected. Low profit, yes, but also zero loss and practically no risk, as long as you don't forget your password. Next up, let's get a little more serious with Treasury bonds and government securities. These are the darlings of cautious investors, and for good reason. They're backed by the government, offer decent yields in the current high-interest environment, and they're about as close as you can get to safe in the investment world. In 2025, some Treasury bonds are offering yields over 4%. And by laddering them, spreading your money across different maturity dates, you can earn steady income with minimal exposure to interest rate swings. It's not sexy, but it's safe. Unless, of course, the government collapses. And if that happens, we've all got bigger problems than bonds. Now, let's talk index funds, the lazy genius's best friend. You've probably heard someone say, just put it in the S&P 500 and forget it. That's because index funds spread your money across hundreds of companies, which means you're not betting everything on one business hoping it becomes the next Apple. In 2025, ETFs like VU and QQQ are still strong picks. They're affordable, diversified, and efficient. No overpriced fund managers eating into your returns. Just steady, long-term growth. Sure, markets go up and down, but if you zoom out and breathe deeply, this is one of the safest bets for building wealth over time. What if you want to get into real estate, but you don't have the budget for a down payment or the emotional stamina to deal with plumbing emergencies at 2 a.m.? Enter REITs, real estate investment trusts. They let you invest in real estate without actually owning property. Think shopping centers, hospitals, warehouses, even data centers. REITs are back in favor in 2025, offering solid dividend yields around 4 to 6%. And since they trade like stocks, they're super easy to buy and sell. It's a great way to add real estate exposure to your portfolio without the landlord headaches. Let's add some flavor to your portfolio with dividend stocks. These are companies that literally pay you to own their shares. We're talking about stable giants like Johnson & Johnson, Coca-Cola, or Apple, companies with a track record of not only surviving economic storms, but thriving through them. Dividend stocks don't just offer regular cash flow, they also tend to be less volatile than the market as a whole. It's like getting a paycheck without clocking in. Not bad, right? Now, don't roll your eyes, but we have to talk about precious metals. Gold and silver might sound old school, but they're timeless for a reason. In uncertain times, metals act as a hedge, of financial umbrella for rainy days. You don't need to bury bars of gold in your backyard. You can invest through ETFs and track their price digitally. A small slice of your portfolio, say 5 to 10%, can add a nice layer of protection without dragging down your returns. In 2025, with inflation still hanging around like that one guy at the party who won't leave, precious metals are a smart defensive move. Feeling a little adventurous? Let's briefly mention peer-to-peer lending. These platforms let you lend money to real people or small businesses in exchange for interest. Think of it as playing the role of a mini bank. The returns can be high, sometimes 8 to 12%, but the risk is also higher. Some people won't pay you back. The key is to diversify your loans across many borrowers to reduce risk. It's not the safest option on this list, but when done smartly, it can boost your returns while still staying relatively grounded. But you know what the safest, most underrated investment is in 2025? That's right, your brain, your skills, your creativity. Upskilling in digital marketing, AI tools, finance, real estate, or launching a side hustle can yield returns way beyond anything Wall Street can offer. Maybe it's a course, a certification, or even starting a YouTube channel like this one. When you invest in yourself, there's no limit to the profit potential. And the best part? You control the outcome. The only way to lose is by not trying. So what's the takeaway here? There's no such thing as truly safe investing. But there is such a thing as smart investing. By diversifying across different assets, some safe, some slightly risky, you give yourself the best shot at growing your wealth without losing your mind. In 2025, the best investors aren't the ones glued to charts or watching every tick of the market. They're the ones who understand the game. Stay consistent and don't panic when the market hiccups. So whether you're stashing cash in a high-yield savings account, building a slow and steady index fund portfolio, testing the waters with REITs, or betting on your own skills, the key is to start. Don't wait for the perfect moment. That moment doesn't exist. Start small, stay smart, and remember money doesn't grow on trees, but with the right seeds, it definitely grows. This is Opinion, your no-fluff guide to making sense of money, business, and everything in between. If you found this helpful, you know what to do. Or don't. Either way, stay smart, stay safe, and stay invested.